evening. Welcome back to the channel. Okay, I will be walking you through the market breakdown. As we all know, today is Friday and the market will be closing. So I'll be walking you down from the trade I picked and till today, and what happened in the market and why they happened, and why I picked the trade that I took. And I think I traded, yeah, I started trading on Wednesday. Like I started trading this week on Wednesday. I didn't pick trade on Monday. I didn't pick trade on Tuesday. I picked trade Wednesday, Thursday, and Friday, which is today. All right. As we all know, we normally mark range which we'll be working on with. So we mark this range here, and then to this range, which the markets actually end up filling it. It filled out the range. So what we will be looking forward for is, let's check the monthly, weekly, and see what the market did. So the market clearly took this low and pushed the upside, complete bullish. Actually, if you just see the overall trend from the weekly, you find out that the market was bullish. It's the retracement bullish, retracement bullish. So we don't actually know what the market will do, but we will use what we have in hand to do. So actually, you see when the market came here, it took this low and then it hit the target that we were anticipating. So what is next? Actually, I personally denoted that the market will be bullish. So my expectation was actually to tap into this from this week, from this body of order block, to go to the upside. So that was why I was looking for buys, but then the buys failed at that moment. So I took three trades, and I'll be walking you down to the trades I took and the reason why I took all of them. So I have a day separator, which is, I think this should be Monday, Tuesday, Wednesday, Thursday, and okay, this should be Monday, Tuesday, Wednesday, Thursday, and Friday. So I took trade this day and then the next. So I'll drop down to this time frame and then I'll take you down how I saw the opportunity that and the reason why I took the trade. So actually you need to know the reason why you pick your trades and then you allow your trade to play out, because you have reason why you place the trade and you have reason why you place your stop loss, you have reason why you place your take profit. So as we all know that the market shift structure from this place, all right, it shifts structure from this place. That's from the bigger picture. But when you go down, find out that the structure shifts began from this place, right? So it began from this place. So we have our inducement liquidity down here, and then the retracement. As the thing came down, it plunged up again, and then came down. We pick our buy to the upside, which I didn't participate in it. So I started trading. I didn't trade Monday. I didn't trade Tuesday. I traded Wednesday, which was here, which apparently didn't go well. But let me take you down to how the trade went. So as we know, it's by so my thought was, okay, based on the structures here, not my thought actually. It was on a bullish trend, right? So when it came here, excuse me, when it came here, it began to decline to pick order before pushing to the upside and then going. So when I saw this place, I actually look at this place as an inducement, which I was wrong. But market, if you drag it closer, you find out that the market, that this place work out this low, right? Then it began to push to the upside. So when I saw that reaction, so I was like, the market can be crazy sometimes. So and it's aligned to the other block to the outside. So I woke up, I found the market in this place. So this was what I did. I marked this shift of structure. Right. Let me even take you to 5 minute time frame so that you see the charts very clear and see the reasons why I waited for the market. So I saw a structure here and then my inducement liquidity just below it. All right. So that was it. The structures were just pushing up. So what I was actually waiting for was for the market to come and tap into this point of interest. You see this place. So I waited for the market to come and tap into the place, and my target was actually above this place. This was my target. 1:7, right? 1:7.79. 1:7.79. That was my target. When the market went up, it declined and it took me out. So when it was declining, I reduced my risks to this place, to the immediate low. So I was risking $50 on this trade. So I end up losing $20.88 on this trade. So, and as we all know, discipline is everything. So I just discipline, risk management, trading plan is very important. It's very, very important. So that was what happened on this trade. So I end up losing the trade here. All right. So moving up to the next day, this is the donation that separates that on one that separate Wednesday to Thursday. So as I woke up, saw almost the same structure, working with this low. Mind you, it's not random. So when I saw that the market came down and took this and cleared this low, which was an inducement, and then pick orders from this low. So I was kind of, yeah, and you see the responses was to the upside. And based on structures, we have structures here, structure shift liquidity, inducement liquidity, and then sweep of the liquidity then went up. Structures were actually going to the upside. All right. So structures are in place. So this declining was a was in the evening, right? Was in the evening and then night to the next day. So actually, I kind of saw that this is a liquidity, right? It's just almost like a compression liquidity. So what we were expecting the market is to do is to clear the upside after it takes any order from the low side, which it did here. But before it happened, this was what I came and I found, right? So I had my structure shift, right? I had my structure shift here, another structure shift here, right? And then this one became my inducement liquidity, and then this became my point of interest, which I put same limit order here, right? I put my limit order there, and then my target was just above this. So look at how market did. Market went up close to my take profit and declined and took me out. With on this trade, I lost. I was also risking $50, but I lost 25.20 cent, like $25.20. That was what I lose here because I shifted my stop loss also to the down, right? Still, mind you, these two trade I was supposed to risk $50 each, but I end up losing 25.80. Okay, 20.88 here, and then 25.20 here, right? Yeah, 25.80. So that's very, very important. You you see, I didn't lose the amount that I was supposed to do. So okay, fast forward. This good. This is Friday, right? So I had this shift of market structure. Like this was a huge of shift of market structure here. This is a low, but this was what I actually used, right? Then you see, as it shifts from here, it retraces, came down, shift here, inducement, it retraced, it sold. Actually, this place was a range in 4 hours that the market was supposed to work with, which it did worked with. So you see a shift of a buy side liquidity taken, and then targeting the sell side liquidity which was here and was taken. So this was what the market in instead was working with. It deceived me. Just joking. All right. So this was it. So it took this and then went up. So this was what I was actually saying that the market should go below because of here and then some other point of interest to the down to the left side. All right. So let me show you because of reference sake. So actually this is another block which turned to breaker block, right? So you see what I was targeting, that the market should come and plunge into this level, right? So and then below it there is a gap here which the market might come and tap into. So right, that was my reason. So of the TP, and then while still trading these, I was risking the same $50 per this trade. Mind you, the $50 is the amount that I feel very okay, comfortable, that I feel comfortable trading the account with, and it's just a certain percentage in my account, not a big percentage, but it is very, very convenient for me to risk that amount. And mind you, please be able to risk the amount that you feel convenient trading. Risk management is very, very important. It ensures you last long in this market, that you trade and be at the other side, and be at the good side of the other of the okay, and be at the other side of probability. That's very important, right? So as you see the markups at at this level, so at um my structure shift, let me show you much more beautiful. All right, so I had my structure shift. So I had this in this other block, which this market came at 8 o'clock, and then that's Nigerian time, and then it didn't tap into this other block. So I was like, kind of, wow, this served as my inducement. That's why you see I think I wrote it here, the inducement, and then the all B here, right? So and then structure shift. You see inducement. I wrote inducement here, which was here. I patiently placed my limit order here. So when the market came and tapped into it, before, mind you, I was also risking the $50, right? I was risking the $50, but at that moment, it ended up. I think I end up risking $37. Yes, yeah. So as I place my trade, it's it does spike to the upside. It spiked to the upside and take me out immediately. So actually, I was kind of wow, okay, that's nice, and I didn't trade again. So that is it for now. Three trades in a row, three losses. Wednesday was a loss. Thursday was a loss. Friday is a loss. And we still okay, we still cool. All of the loss I took in this trade are actually not up to $100. It's not up to $100 three trades. And my RR, my risk to reward is very high and my win rate is good. Yeah, but as it is now, it is what it is. Okay, no need to call for alarm. No need to panic. I have planned this trade, and if I fail three to four trades, four five trades, I know I have already put them down in my journal. Right? I've already put any possibility in my journal. Whether I took so amount of wins, I will still be okay. I still take so amount of loss, I should still be okay because my mind is has already set itself to be okay with risking certain amounts of money, and I should have my system in order in place, so I will execute based on my structure in place. So when the market did this, when the market took me out, I didn't chase the market. The market went up and then shifted, broke structure. It broke this structure here. It broke structure here and also broke another structure here, which was an order block which was supposed to hold the market, but the market went through it, so it now became a breaker block, right? So as it became a breaker block, so this is it, exactly where it should be. So, and then just imagine I took this trade. I don't chase the market. I don't. I know the market will give me another opportunities come in the market. So I didn't chase the market, and I don't chase market. I wait for them to come to my place of interest, and I push the button. So if I had take this market, it would have recovered all my losses and still give me $415. That it will give me overall 540 something dollars. So it takes out everything, it will be 400 and I think 14 or $15. So it's actually okay. It's actually okay, right? So notice not something. Plan your trades and trade your plan. Thank you very much. Like, share, subscribe. Most importantly, subscribe, guys. Subscribe. It's very important. This is an honest review. This is an honest review, right? Thank you very much. Have a wonderful week.